Well, let's keep that markets theme going with Tim Waterer, the Chief Market Analyst at KCM Trade. Tim, good to see you. Looks like a sea of red out there. I mean, what's really triggered this big sell-off on the Australian market today?
Good to be with you, Ed. Yeah, it's really a deluge of negative news has driven our market to these lows today. Now, you mentioned one of the key factors. That was the message we got from the RBA today. And I think there's a little bit of a resignation from traders that this could be as low as interest rates go in the current cycle. Now, that's not definite, and the RBA said as much today. It really depends on what happens to, I think, in employment going forward. I think they're sort of hinting towards a scenario where if unemployment did rise, there could be a scenario where they could be cutting rates further. But as things stand now, yeah, there's certainly no guarantee that will happen. So tighter monetary conditions than the market would like, that was one of the factors. And then, of course, we had the sell-off in the US overnight. They're also worried that maybe we won't get a rate cut from the Fed in December. And then we got the tech sector wobbles as well. So it's really a perfect storm of factors really impacting the market today and painted a not so pretty picture for investors.
Yeah, a lot of red out there. I believe it's the largest single-day fall for the ASX 200 since April. Before this big drop, though, going back a month or so, was the stock market looking a little bit overvalued for quite a few investors?
That is also another factor as well, yes. I think valuations were a little bit stretched, certainly for some of the blue chip companies at home here and also in the US as well. So valuations really coming to the fore. I think there's a lot more discerning from investors right now, and they're looking for value and maybe steering away from some of those companies a little bit stretched on the valuations front. So yes, that is a factor. So yeah, and of course the other thing that impacted our market was we've seen a bit of a dip in commodity prices as well. So when you look at all the sectors today, there was really nowhere to hide. Every sector in the red, and that includes the defensive places like healthcare and utilities, which normally would be where investors like to park their funds. But I think what we're seeing is, yeah, a lot of this risk aversion ahead of two big risk events to come this week. One's the NVIDIA earnings and the other is the non-farm payrolls in the US. So investors taking some money off the table and just playing it safe until we see how those risk events play out, I think.
Yeah, we can put up some graphics on the screen showing you the big banks, for example. Obviously, a large component of the ASX, you can see they're all down today. But at CommBank, it's been running pretty hot over the past year. It's been sold off pretty heavily now over the past month or so. What do you think's been the main factor really pushing down CBA shares?
I think that has been the target of a lot of scrutiny over valuations. The sense being that it is a little bit highly priced at the moment. Now, the banks, I mean, they do have a pretty good track record of generating a profit to, you know, pretty much whatever the monetary conditions are. Now, if you're looking for a little bit of a shining light for banks, is that if the RBA does stay on hold, that'll preserve their current net interest margins. So that's maybe a little pocket of good news moving forward for the banking sector. But yeah, I think that yeah, traders just thinking maybe the pricing has got a little bit far ahead of where the earnings are at. And yeah, CBA, I think, and Macquarie's another one, I think, that has been earning some of the ire from investors based on its current price levels.
All right, we can put up a graphic as well showing some of the Asian markets. Looks like there was even heavier selling today. Japan Nikkei currently down 2.9% and Korea down 3.3%. Is this all kind of part of the interest rate story as well?
That's one of the factors for sure. I think that some of the other Asian markets, they were a little bit more influenced by the tech sector wobbles that I mentioned earlier. So Japan, South Korea, the big tech names, I guess, play a bigger part in the index's broader performance than is the case domestically here when the banks and the mining stocks are sort of the big names in town. But Japan, South Korea, it's the tech names doing the heavy lifting. And we've seen the tech shares coming under heavy pressure in the US, once again coming back to these potentially stretched valuations and talk or concern of there being a possible bubble. So I think traders are unwinding some positions, and that's why we did see some of these other markets even faring worse than Australia today.
And then gold prices, I think we've got about 25 seconds left. I believe gold's now about 4,000 an ounce. It's really started to drop back as well. I mean, what's been pushing gold lower?
The US dollar has been rising, and that's on greater doubts about whether the Federal Reserve will in fact cut rates next month or not. If the Federal Reserve does cut rates, that would suit gold well. But if they don't, we could see US yields move higher, and that spells a little bit of bad news for gold price.
Great. Tim, thanks for coming on the show.
Thanks, Ed.